Hi everybody, Ken Heinz here, HFR President with the HFRI 500 May 2023 Performance Snapshot. May was an exciting month, major inflection point in the markets for 2023 was reached. You hear the saying, people talk about March, how it comes in like a lamb and in like a lion and out like a lamb, but that was May for financial markets and hedge fund performance in 2023. The first 2 weeks of the month really dominated by the tail end of the regional banking volatility. The middle part of the month certainly dominated by legislation on the debt ceiling and spending cuts. And then last week of the markets, after hitting a major inflection point on the 26th of May, strong rally led by AI and technology, and that has continued into June. So we had a major inflection point, and we saw mixed hedge fund performance, certainly reflecting all of these risks in this inflection point in the marketplace, where we saw technology exhibit strong leadership and still some declines across event-driven financials and energy-related exposures. Continuing from the previous slide, looking at the composite and strategies from the month of May, you can see that two of the strategy areas, relative value and macro, posted gains for the month. Overall, we have the Dow Jones here down 3.5%. The S&P was nearly flat, while the NASDAQ posted a strong gain. Here we're showing against the Dow Jones as we usually do. A gain of 42 basis points for the most interest rate sensitive area of the hedge fund industry being relative value arbitrage. These are fixed income multi-strategy, credit multi-strategy, and other yield alternatives. Gain of 42 basis points there. Convertible ARB did well for the month. Also, macro, gain of about 30 basis points for the HFR 500 macro index. Overall composite, just a narrow decline of 23 basis points for the month, and that was primarily contributed to from the event-driven space, which declined 1.79, and then equity hedge, kind of reflecting that tension I talked about in the earlier slide. Positive contribution from technology, negative contributions from energy and financials. Net of all of that, a narrow decline of about 1/3% for the month. Continuing with the focus on technology, we're going to talk a lot about that in this video. 4.5% gain for the HFR 500 technology index. Distressed also had a very strong month with a gain of nearly 3%, 2.6% for the HFR 500 macro commodity index. And that's particularly interesting because commodities for the most part declined in the month. So certainly there was some selective opportunistic trading and short exposure there for sure. Commodities like oil and most metals posted pretty significant declines in the month of May. And then finally, the macro systematic diversified, gain of 92 basis points. We know from previous videos, these are the quantitative trend following systematic macro strategies, gain of 92 basis points there. And again, we talked about that compared with the decline for the Dow Jones of about 3.5%. We're now 5 months into 2023, and the leading area of performance is equity hedge with a gain of over 1.5% for the year. And again, this compares favorably with the decline for large cap US equities of about 72 basis points for the Dow Jones Industrial Average. A gain of nearly 80 basis points in the most interest rate sensitive area of the hedge fund industry, that being relative value arbitrage. Overall, composite, including all strategies, gain of 0.25%. That includes the decline for event-driven, again, most of that in the month of May, netting out against some of the gains from earlier in the year. You have a decline of 30 basis points for the year, and overall macro, even with the gain in May, is still down a little over 2%. We all know that that's been strong area of performance for both 21 and 22 with all of the systematic macro exposures there. Drilling down one level deeper to the sub-strategy drivers of performance, we can see that the leading area of performance at the sub-strategy level is the distressed restructuring index, which gained 4.6%. We have a 3.2% gain in the shareholder activist. Obviously, we've seen a lot of campaigns, and that's something that if the inflection point that the market hit in the late part of May continues to be an inflection point, I expect to see more and more activist campaigns and strong performance in coming months in that area. 3% gain for the quantitative directional index. As you know, those are quantitative funds, but unlike market neutral, they have directional exposure long and short. And unlike CTAs, who are also quantitative and systematic, they are focused entirely on the equity space. Finally, we have fundamental growth index 2.64, certainly a fair amount of technology exposure in that index as well. And again, all these compare favorably with a decline in the first 5 months of the year of 72 basis points for the Dow Jones. There's a lot of great information on our website about the Investable HFR 500 index. For those of you that are watching this video, you know that we do regular performance updates of the HFR 500 on YouTube. So please subscribe to the channel. And if you have questions, please feel free to submit those other areas you'd like us to focus on in future videos or other questions you'd like us to answer. I'm happy to do those. Visit our website, www.hfr.com. And when you get there, go to the Investor Guidebook. This is a great piece of material that talks a lot about the use cases that institutions are using when it comes to looking at the HFR 500 as a solution for common benchmarking challenges. So I encourage you to review the Investor Guidebook and reach out to me with any questions that you might have about it. And then obviously to set up a call or to if you have any questions, HFRI 500 at HFR.com, or you can reach out to me, Ken Heinz, or anybody that you're in touch with at HFR. If you've got a specific rep that you talk to, please reach out to them. And you can direct the questions to me with regard to the HFR 500. Thanks. Look forward to speaking next month.